Welcome back to Daily Digests for July 28, 2026. Global equity markets are confronting an intense wave of retail deleveraging and technical pressure. A dramatic 10.3% single-day collapse in South Korea's KOSPI index triggered forced margin liquidations that spilled directly into U.S. technology equities. At the same time, trailing three-year retail margin debt has doubled, putting the Nasdaq 100 to a critical test at the 24,500 support line.
Our top development today comes from Asian market trading desks and Chinese market coverage. South Korea's benchmark KOSPI index suffered a historic 10.3% decline during local trading, triggering automated market circuit breakers. Over-leveraged retail accounts faced aggressive broker liquidation notices, accelerating forced selling across major technology holdings.
This Asian market liquidation carries direct implications for U.S. equities. Data shows the 60-day rolling correlation between the KOSPI and the Nasdaq 100 has risen to 0.50, its highest level since 2021. With South Korean retail investors purchasing a net $3.6 billion in U.S. tech stocks in July, more than 5 times June's total, margin calls in Seoul are forcing immediate liquidations in American semiconductor names. The resulting selling pressure triggered capitulation volume across global chip stocks. Semiconductor trading volumes surged to its highest level in 2 years as the sector entered a formal 20% technical drawdown from its June high. Systematic funds and institutional desks absorbed heavy volume, testing liquidity buffers across major semiconductor exchange-traded funds. On the U.S. technical tape, the Nasdaq 100 has pulled back 10% from its summer peak, entering a technical correction. The index is currently probing key support at 24,500. Technical analysts note that failing to defend this floor opens the risk of a swift retest of the annual moving average near 24,000. Broader leverage indicators are reinforcing market caution. Total retail margin debt has surged 100% on a trailing 3-year basis. Historically, 3-year margin debt spikes of this magnitude have presaged major market correction cycles, aligning closely with risk signals seen in 1998, 2000, and 2007. Credit markets are also pricing in elevated risk around AI hardware leaders. NVIDIA's credit default swaps recently rose to historic highs, indicating that bondholders are demanding higher premiums to insure against corporate debt risks amidst tightening financial conditions. Simultaneously, fixed income markets are displaying heightened volatility. The MOVE index, tracking Treasury bond volatility, broke out into bullish momentum last week, signaling persistent rate uncertainty and tightening overall liquidity across bond market collateral channels. In response to growth stock volatility, capital is actively rotating into defensive cash flow sanctuaries. Coca-Cola delivered a standout quarterly earnings report, raising its full-year 2026 free cash flow guidance to $12.4 billion, supported by $14.6 billion in operating cash flow. Coca-Cola's updated guidance confirms that previous cash flow shortfalls were temporary accounting artifacts, including a $6 billion IRS litigation escrow deposit and $6.1 billion in Fairlife acquisition payments. With those one-time cash outlays completed, Coca-Cola's core cash flow engine is fully restored. For tactical market participants, select semiconductor leaders are reaching compelling technical support. Micron has pulled back to its year-to-date low-anchored volume-weighted average price, undercutting last week's low. This setup provides institutional traders with a defined risk boundary for potential counter-trend bounce setups. To manage risk effectively in a volatile tape, technical strategists emphasize strict dip-buying rules. Rather than catching a falling knife, systematic rules dictate waiting for price to reclaim and cross above the 5-day anchored volume-weighted average price before committing capital, maintaining disciplined stop-loss boundaries below swing lows. To summarize, July 28th, South Korea's KOSPI liquidation and 100% margin debt surge underscore the current global deleveraging pressure on growth stocks. As the Nasdaq 100 tests 24,500 support, rotation towards stable cash generators like Coca-Cola remains the primary institutional theme. Thank you for tuning in, and we will see you tomorrow.